To build anything that truly lasts, it takes time.
What's your view for the market participants? I mean, how should one mitigate the risk at present? We see a lot of global happenings, and at the same time, the earnings trajectory, we are midway. We don't see any froth coming or any good signs coming, at least from the domestic earnings picture also. So how should the market participants behave at this point in time?
Yeah, so domestic earnings till now has been mixed, but I think the somewhat good news will come from the second quarter onwards in earnings, which was my stance even earlier. Because see, there have been some good macro developments. One, of course, you know that the GDP came out ahead of estimates, but more than that, on the consumption side, one thing which will boost earnings is the lower inflation, especially in food and crude, and therefore the crude derivatives. So because India, relatively, the household budgets are very stretched. So if the dal and oil prices go up, uh, you might stop buying soap or shampoo or something like that. So uh, that was the overhang for the last, I would say, almost 2 years. And I even saw some statistics that even the household, the food thali kind of has not. It's not just that the inflation has come down; the prices have come down, which of course is on the other side. You can say that for the agriculture segment, that means that realizations have come down. But for the urban consumer or the non-farmer consumer, let us say there's actually more room in the household budget, which should boost consumption. And when I mentioned crude, of course, all the downstream products of crude are inputs for many industries. So I would think that over time you will also see some positive moves on the margin front. So I mean, I would think there will be some improvement on both the revenue growth and margins. And as far as the investors are concerned, I always say that good investing is boring. So which is why people tell me that so many times you repeat the same advice. I said, like, because the advice doesn't change every 2 weeks, and which is that never be 100% invested in equity, but whatever is your equity allocation, most of the time it makes sense to be invested. Because when people are asking these questions, that there's uncertainty and fear and all that, typically that's when you might get a very sharp up move in the market that you miss. So on the other hand, of course, I'm not saying the market cannot go down from here and there is no downside, but you always have to look at the risk reward, that
Right.
uh, uh, what is the potential downside versus the upside.
Correct.
And again, I'm repeating that if you miss out the 10 best days in 40 odd years, you give up 2/3 of your return. So most of the time you can't afford to
Absolutely.
sit out.
Absolutely, Devina. Hit our conversation short due to paucity of time. We hope to chat with you lots more next time. Thanks so much for joining us.